Hey, I'm Luke, and today we're going to discuss if this is so easy, why doesn't Wall Street do it? It's not necessarily that they don't want to, but ultimately they can't, which creates an edge for the retail investor. Stock Mixology screeners often output smaller companies. These are out of the reach from Wall Street funds due to structural and behavioral barriers that handcuff institutional investors. Barriers that retail investors can sidestep with a systematic approach like Stock Mixology. These institutions, think mutual funds, pension funds, hedge funds, manage billions, often tens of billions of dollars in assets. So companies that are smaller may be too small for their own playbooks. These stocks often trade with low volume, meaning a large institutional trade can spike the stock price, eroding returns. A 2024 study by BlackRock found that a $100 million trade in a micro cap stock with $1 million of daily volume can move the price by 8 to 10%, wiping out any potential gains. Compare that to a retail investor who could buy $10,000 worth of the same stock without making a ripple. And Wall Street is not just about returns, it's about survival. Institutional managers face quarterly performance reviews, and underperforming can mean career suicide. That's why they flock to household names like Tesla, Amazon, Walmart. These stocks offer safety in numbers because if everyone's down, then no one gets blamed. But betting on a lesser known microcap, that's a career risk. A 2023 CFA Institute survey found that 68% of fund managers avoid small caps due to, quote, reputational risk during short term underperformance. And decades of research confirm the edge of micro and small cap value stocks. Fallon and French's 2020 update to their seminal 1992 study shows that these stocks have outperformed large cap growth stocks by 3.5% annually since 1926. Compounded over 20 years, that's over 100% return advantage, turning $10,000 into $27,000 versus $13,000 for large caps. AQR Capital's 2023 analysis further found that small cap value strategies beat large cap growth by 4.2% annually after adjusting for risk, thanks to market inefficiencies and behavioral biases. Institutional constraints like liquidity risks, regulatory burdens, and career safety keep Wall Street away from microcap value stocks, but retail investors face none of these hurdles. With Stock Mixology's systematic, rules-based approach, you can target these undervalued gems without moving markets or worrying about scrutiny. The evidence is clear. Microcap value investing can work. The question is, will you seize the edge that Wall Street cannot? Thanks for tuning in. Be sure to subscribe for a free account at stockmixology.com. And feel free to reach out to us too from the contact form on our page.